petroleum oil and gas company PetroSA is allegedly charging ESKOM high prices for diesel. Now, energy analyst Chris Yelland says the ailing power utility is being forced to pay above market prices by the state-owned entity. ESKOM uses diesel as backup for its open-cycle gas turbines. In its response, PetroSA says there's no truth to the allegations, adding that the higher prices are a result of market dynamics. For more on this, we're joined by Vusi Xaba, a trading executive at PetroSA. Very good evening to you. Thank you so much for your time. Perhaps let's start off with some clarity and understanding. Is ESKOM being forced into this?
No, thank you. I start by saying no. There are contractual agreements between PetroSA and ESKOM, and there are ways and means through which, we supply each other, contractually so. So I think it's proper that we put things in perspective in the following manner. East Africa, historically, we were refining our own products and supplying the market. And in the last 2 years, we've lost almost 70% of our refining capacity as a country. So that is a very dire consequences for the country, meaning that as a country, we have to import all our requirements, and that puts pressure, onto the system. And in a highly volatile environment, it requires that we get very organized, I would say, as a country. So there is no tap through which way we can just open a tap and just get product and supply to the market. So with losing 70% of the refining capacity, PetroSA has over time, worked with PetroSA, with ESKOM, apologies. And in that arrangement, the markets were quite flat, no volatility, everything was working quite fine. After the Ukraine and Russian issue, we started seeing the volatile markets that started escalating. And then over time, PetroSA was really, I would say, subsidizing the supply to ESKOM. How do I explain that? We need to explain these things so that people can understand how the South African market is priced. So in essence, when you're looking at what we call the basic fuel price, I'll give it as an example. If you are selling fuel in the month of February, meaning that the pricing of that product would have been the average of January, yeah? So meaning that you should have actually bought your cargoes in the month of December to arrive in January, to load in the month of January and price the average of January and land in South Africa in the month in which you're going to sell the product. So meaning that you are aligned with the BFP of the country. So we've had engagements with ESKOM when we started seeing that there were like erratic, I would say, demands that were coming from ESKOM. Mind you that PetroSA, has got limited facilities. We've got storage in Mossel Bay. So we buy what is needed by our market, and ESKOM also being part of our customers. So in so saying, when we approached ESKOM, we started seeing that their daily burn rate started moving from 1 million liters a day to 3 million liters every second day. So as you're well aware, that requires proper planning. What do we mean by proper planning? We went to ESKOM and explained that the situation has changed. We need you to give us a proper forecast. Why do we need a proper forecast? We are buying products actually from the Middle East, which on average it takes about 15 to 20 days for a product to arrive in South Africa. So what it means is that we as a country, we're supposed to lock what we call long-term supply contracts with the suppliers. So we require the forecasting so that when we buy in the month of, because we have to nominate way in advance. So meaning that for a cargo to land in the month of February, we have to nominate in the month of December. So the cargo will then...
If you allow me to just interrupt you there, when did the shift begin? At what stage?
Well, can you elaborate when you say the shift?
In terms of the pricing aspect.
It has always been like this as a country. It has always been like this. So, well, in the past, I mean, this was not felt because remember, we had refining capacity. We're producing our own diesel and petrol in the country. So now we're no longer producing that because our refineries have shut down. We only have 2 refineries in the country. We have Natref and Saso. What it means now, we have to import all our products from the Middle East, as I've mentioned. So what it means is that with proper forecasting, we're able to lend the volumes of diesel in the country that will be aligned with the pricing in the South African market. Let's take a case where now the band rate of ESKOM has changed. So the band rate, if it has changed, and now a vessel that was consumed over a period of a month is consumed over a period of 2 weeks. It means now there is no tap where we can actually go and source it, because remember, it takes on average 15 to 20 days for a cargo to land in South Africa. Then we are forced to go and buy in what we call a spot market. A spot market, let's take a typical case. BFP has priced the month of January, which is M-1. Now we have to buy a cargo in the month of February. Now there's a different pricing window. In a rising market, it means we are now buying expensive. So when you buy expensive, someone is supposed to pick up the tab. So we've categorically explained to ESKOM that we need to properly align ourselves so that we avoid anything that will actually misalign pricing and supply, I mean, to you as a business. So we've had engagements from the month of September. We've explained, I mean, what the situation is in the country. And in so doing, I mean, it was as if we agreed. We met with senior management at ESKOM. We wrote letters explaining what the dynamics are. It was not like a unilateral situation. We went to their offices and explained the situation, how it's unfolding, and how it's affecting the commercial terms at which actually we agreed upon. Of which, I mean, the commercial terms, I mean, are what are sitting between ESKOM and PetroSA. But they are well aware. So when we buy on a basis where we buy in spot and prices are high, we communicate that to ESKOM. We have agreed that should that situation occur, we will actually show them what the supplier's invoice is. And on the basis of what the supplier invoice is, we will actually take what we call our margin and pass on the product and exactly as the price that has been charged. Because remember, we're running a business. I mean, PetroSA is a Schedule 2 company. It does not actually depend on the government for its survival. But we refute, I mean, the fact that PetroSA has overcharged, I mean, ESKOM.
Yeah. So you made reference to the BFP. Are you talking about the basic fuel price as you made that reference?
Yes, the basic fuel price. So the case at hand, because remember, this was a very selective case. They took a selective case was taken. Remember that we've got history where PetroSA has been constantly subsidizing, I mean, ESKOM. We've seen that over time, and that needed to be rectified, especially, I mean, you know, those losses were quite minimal, but as soon as it started increasing the band rate, that started actually creating what we call holes in the PetroSA balance sheets. Then we needed them to have like a robust engagement that would align the two entities. So what happened then, by seeing that we were not actually getting what we call a focus from ESKOM, we took a position. Remember that the December month, nothing happens. It's a quiet month. No one actually is going to supply with product. We bought a cargo in the month of November, pricing the average of November, to land in South Africa and get and discharge in the month of December, where we know that ESKOM will have a demand. So for some strange reason, there was no band rate, so there was no lifting of these volumes from in our tanks. And interesting enough, exactly at beginning of the year in January, there was a very high demand for diesel. And that actually meant PetroSA was exposed to the market itself. Remember that in the month of November, prices were higher. And in the month of December, when the prices dropped, which is what we've seen in January in 2023. So meaning that, I mean, someone had to pick up the tab, because remember, we had to take a position to ensure that ESKOM is not left without diesel to keep the country, I mean, on with electricity.
Okay. So you're saying that ESKOM is not being forced, right? Just to make sure that there's understanding here. You're saying that ESKOM is not being forced. You're just making sure that you're operating at as an entity that's financially viable, so that your price now needs to be higher than the actual price market, than the actual market price, pardon me.
Yes, like any other client. I mean, we do have clients like any other oil companies in the country. I mean, we make sure that the price is right, the price is market related. So I mean, ESKOM is not forced in any way to compete with PetroSA, but however, we are sitting in a very interesting situation where we have facilities that are directly supplying ESKOM. Because remember that PetroSA has got what we call a refinery, which is currently not operating, which will start operating in the next couple of years. It is well positioned actually to supply, ESKOM economically. So, I mean, with the outage, so we're in a contractual window. In this contractual window, we rely on ESKOM to give us a proper forecast to ensure that we supply them at market-related prices, as I've mentioned. So, I mean, I would say, as at today, whatever is going on in the news, the conversation is still taking place between ESKOM and PetroSA, and as of today, we've supplied over and above what we normally give them in a given month. We had a vessel that landed in January, but most of the diesel was bent. I would say 30 million that was bent in 2 weeks. So many that now were left in a hole, so many that, again, we have to go and buy prompt. But interesting enough, PetroSA had already taken a position that will ensure that in the month of February, again, we land the cargo. As it stands today, we have a vessel that actually is landing in South Africa that is responding to these erratic moves or these erratic demands that are coming from ESKOM. And mind you, we still have other clients that we need to really supply. Mossel Bay is a market that we are servicing as an entity. Mm-hmm. So, what would be fair is that, because as I've said, we no longer have refining capacity. We don't have taps through which we can actually source diesel. Yeah. It takes time. And given enough
quickly,
time...
If you'll allow me just to squeeze this one in, is ESKOM forced to buy diesel from you? Are there any other options?
I would say, ESKOM does have options. They have a facility in Cape Town as well as in Mossel Bay. They can run either or plants that will allow them to source economically. So there is no forcing. It's a contractual relationships. As I've mentioned, PetroSA facility in Mossel Bay is sitting strategically to supply product via pipeline to ESKOM. And we are not taking that as an opportunity to milk money out of ESKOM. We are working, around the clock, to ensure that we source economically. As I've mentioned, as I'm sitting here today, there are vessels that are planned to land in South Africa to ensure that we are aligned with the BFP. So, what actually became a very unfortunate situation, ESKOM was facing a financial situation. Mm-hmm. So in the month of January, they could not buy the products that are sitting in tank. And as an entity, remember, if ESKOM were to buy and to go to any other oil company and sign an agreement, normally when it comes to the big suppliers, the contracted terms are you take or you pay.
Okay.
And as an entity,
thank you so much. Unfortunately, we've run out of time. We're going to have to leave it there for now. But yeah, thank you for giving us that very detailed explanation, just giving us a sense of understanding on what this now means.